Thank you. Good afternoon, everyone. Hope this works. Yeah. Fintechs and banks. What do we know about them? Basically, about banks, we have quite a long story. We know quite a lot. And about the success of fintechs, we hear, almost every week. Both need and compete to get the best employees in the market, professionals in their fields. Both entities provide with products and services. Some of those we use on daily basis. Most of us use on daily basis. And about the other ones, when we hear, we think, okay, this is nice, never thought about it. Both of them aim to solve one or another problem to their customers. Only ones do it in a more agile way, and other ones in a little bit structured or conservative way, I would say. So yes, they are competing, but the question is, can there be a synergy? Actually, this is a very serious strategic decision. Since the world is changing fast, customer needs are changing, governments and regulators adapt. New businesses emerge within this phase, so banks should change and adapt as well. But we find, or we see, a few challenges. First of them would be challenge of risk versus reward. When bank assesses risk versus reward, they conclude that banking a fintech is not worth it. The first challenge is mostly about the environment of regulator. This is a huge landscape, and it's changing rapidly, both locally and globally. So it's very costly for a legacy bank to change something in their model, in their business model, and actually it would take a lot of time and quite a huge investment into their risk and compliance departments. Another big challenge is technology. Fintech require from their banking partners to provide them with the latest, up-to-date technical solutions. And most of legacy banks are not ready yet to offer such infrastructure. So once again, this leads to a thing that bank should invest one more time, quite a lot of money and time as well, to their IT departments. Third big challenge is commercial part. I have already discussed about two ones, but we should not forget about the risk, reputational risk, which is there, and banks should consider taking it. So naturally, the bank would look for terms which would cover all those three things. And when they do their calculations and provide with an offer to the fintech, it ends up that usually fintechs are not being banked. On the other hand, we have fintechs with a lot better product offering. They are more focused. They have really good technological knowledge, and all those things help them to provide their customers better, faster, and even cheaper services. For example, if you would like to open just a regular bank account, it would probably take you days. Okay, maybe not days, but at least you will have to visit a branch. And with the help of Fintech app, you can do it in a second or in a few minutes. Another example might be with a lending. Same thing. Yes, there are ones or another banks which improve that, but usually it will take you, I don't know, days, maybe a few weeks or even longer to get a loan at a high street bank. But if you use, financial institution, fintech, you can get your loan in minutes, I would say. So, yeah. What kind of banks do they need? So, actually, we might raise a question, why those big banks are ignoring things? Or we can change the question and ask why those banks, those big banks, are not taking the position and not acting as a main facilitator for the fintechs. Well, you know, there's at least one bank which acts as a main facilitator, and it's European Merchant Bank. But yeah, being fintech friendly, first of all, is all about mindset that embraces the innovation and the intention of regulator. Also about understanding the technology and the problem that your customer is trying to solve. By having all those things, European Merchant Bank is providing with banking services to fintechs and enable them to grow. When it comes to over-reliance on the legacy banks, we want view it from both consumer and business point of view. From consumer point of view, reliance on a legacy bank sometimes can lead to lower, or let's say, to lower your access to the services, or to the price increase as well. From business point of view, most high street banks can refuse to bank you only because they don't like to work with the industry you're in. For many e-commerce or financial institutions, being rejected by a bank is more a rule than an exception. So compared to the new fintech companies or so-called neobanks in the market, legacy banks sometimes can seem too slow with their offering, or let's say with their onboarding. By the way, if you are running a business and it's not online yet, so we strongly recommend you to, adopt, change your model, and go online, and we can help you with that. We must keep in mind that a large number of businesses are underserved and underbanked. This is actually a global problem in Vilnius, in London, as in Jakarta as well. So inclusion is the fundamental key in creating an even playing field. Services often named as banking as a service through a simple API connection can provide you with access to SEPA, SWIFT networks, or just issue IBAN account number. Unfortunately, there are a small number of banks that are willing to bank fintechs and financial institutions, but we, European Merchant Bank, can support different fintech needs by providing multi-currency accounts, by providing safeguarding accounts, or just clearing the funds. There are loads of different fintech applications trying to lower the barrier for individuals and SMEs to gain the access for the fundamental services. Banks like European Merchant Bank can be even regarded as a marketplace for for businesses that do regulated things like payment services, like investment services, or maybe let's say, pensions. So what kind of banks are smart ones? We need to look at a bigger picture to see how we all can play the role of an enabler, enabling different businesses or different industries to grow and prosper is the right way and the right direction to keep the positive agenda. Traditional banks have a unique opportunity to embed themselves into Fintechs offering, and not only by providing payment rails, but also by acting as a marketplace and connect their audience or their customers with the Fintechs, with third parties, with their offers. While some existing players may be late to respond to the rise of the Fintechs, others probably are investing and starting to create their own services or partnering with established Fintech players. I see optimal balance where instead of engaging into costly price wars, existing players should collaborate with Fintech players and create new, better and easier processes and products. This form of cooperation, competitive cooperation, or maybe even co-opetition, will move the industry from a zero-sum game to an environment where all players will benefit and be more profitable. Thank you for your attention. Hope you have a good evening.
Thank you very much. Thank you very much for the presentation, Justinas.